Ladies and gentlemen, welcome back to another video. I'm your host, TheDividendAristocrat, and today we're going to be talking about PayPal stock and why I think you should hold off on purchasing this company. As a reminder, this is not financial advice and I'm just merely sharing my opinions on this channel. In this video, we'll take a look at my personal holding within PayPal stock, including my cost basis, my separate purchases for the stock, and how much allocation I currently have towards PayPal. After that, we'll take a look at PayPal's stock price performance, which has actually been very strong in the past year, and I'll explain to you guys why I have my hesitations on buying more shares of the company at current prices. We'll finish off by taking a look at some of PayPal's financial metrics, so if you guys do enjoy this type of content, consider subscribing to the channel. I'm on my way to 2K and I would really appreciate it. As always, let's begin by taking a look at my portfolio dashboard. So in total, I have $35,391 invested and my current value sits at $49,061. That gives me a total return of 38.63% or an unrealized gain of $13,670. In total, I've earned $1,454 worth of dividend income that's been reinvested back into the portfolio, and my yearly projected income going forward is $790. In terms of the most recent performance, in the past day I was down 0.87%, which equated to a $432 loss. My current cash position sits at about $6,105 with 24 different holdings, and I want to deploy this cash into some of these holdings that I already own if I can find the good opportunities to do so. So jumping into my portfolio holdings section of my spreadsheet, we can see where PayPal ranks compared to all the rest of my holdings. And right now I've organized this in terms of the highest total return all the way to the lowest, and PayPal ranks pretty close to the top. At 54% total return, it puts it at my 7th best performing holding as it currently stands. Now my cost basis for PayPal is pretty low at $56.37. I waited a long time to purchase this company and I thought that it was trading at a pretty good discount during this time, so I purchased a pretty big position in it, around 1 to 2% of my portfolio value, and the current price sits at 86.86%. In total, I purchased 15 shares, and with dividends reinvested, it's still 15 shares because PayPal does not pay out a dividend currently. In total, I paid $845 for my entire position, and the current position is sitting at $1,302. Now real quick, before we look at my individual purchases for the stock, it's currently sitting at 2.7% of my portfolio value, and I'm very comfortable with it where it's at. I wouldn't mind increasing the position if there's a decent dip in stock price, but as we'll talk about later, as it currently stands, I'm not adding any more money into the position. Looking at my order history section, we can see that my first purchases into PayPal were right here. I purchased 6 shares at varying prices. The lowest was $51.84 for each share, and my original purchase was a little bit higher at $54.89. Now following that, I kept adding more into my PayPal position in January of 2024, and I think this is where I added my remaining shares. I bought 9 more shares at a much higher price than previous, at $59 for the first group of shares and then $56 for my last 2 shares, but I really could have bought shares cheaper if I would have bought them at that $51 price that we saw before. Now hopping into Google, we can take a look at the stock price performance. So we can see in the past year, it's up 37.7%, but if you would have bought it near the bottom right here, let's say at $57 per share, your return would be much higher than that. At the peak, 59.56%, and as it currently stands, it would be at 51.8%. Now, if I put the 5-year picture on here, it paints a completely different story. PayPal was soaring very high at pretty extreme valuations in 2020 and 2021 before kind of valuations caught up to it and investors had a different sentiment around the stock, and the stock price tanked significantly. From the peak until the bottom, the stock price was actually up at some points over 83%, which is insane. The company lost a lot of its value, and that's because it was trading at very high valuations, and it's a reminder why it's important to pay a good valuation for a good company. As Chuck from Fast Graphs always says, valuation matters, and it matters a lot, and I could not agree more. Valuation will always catch up to a company's stock price, and there's a couple ways in which it can do so. The first way that it could, and the most ideal situation for investors, is if the fundamentals of the company catch up to the valuation, meaning if PayPal increases their earnings so quickly that it catches up to that extreme valuation, that'd be a best case scenario. That way they could avoid significant dips in stock price, but what happens more often than not is that the valuation metrics come down in order to meet the lower earnings that the company does have. Now from the bottom here up until now, and I bought a little bit higher than this one of my positions at $51 per share at some point, you would have been up 80% at the peak or around 72% right now. Now in terms of this big drop off here, it doesn't concern me too much. PayPal fundamentals have improved since this period. The company has been doing a lot of stock buybacks, and the valuation has corrected itself pretty significantly, of course, since back here it was trading at much higher valuations, and now it's currently trading at a price to earnings ratio of 20.75, and the company is of course profitable. If we take a look at the max time frame, you can see how ridiculous the growth that it did have during this period was. I believe it IPO'd in 2015. I think eBay owned the company before. I believe they bought out PayPal earlier and they decided to IPO it around 2015. And if you bought the company then right after IPO, you'd have had some pretty good increases for a while. And then after COVID dropped, it pretty much skyrocketed up in stock price only to come crashing down once again. Now while we're here, let's talk about the main reason I think you should hold off on buying PayPal stock, and that's because of the Honey browser extension. Now a lot of people might not know this, but PayPal bought out and owns the Honey extension entirely. Now I would be surprised if those of you watching my video today have not heard of the Honey extension. I think everybody who's been on YouTube for quite some time has seen at least one advertisement of Honey and maybe has even used the platform, with them having over 17 million users, which is an absurd amount. Now the main idea behind Honey is that it finds you deals on different websites. So basically if you're shopping on Amazon, for example, and use the Honey extension, in an ideal world, it'll find you a discount code, for example, a 10 or 20% discount code that you can apply at checkout to save money on your order. Now, I don't have any problems with that in particular. The idea of an extension being able to save you money on your purchases is fantastic, and I think most people would agree. However, the problem with Honey is that it was screwing over many of its customers as well as the companies that it was working with. Now, if you for some reason have not yet watched this video from Megalag, you should definitely check it out. It has 11 million views. He posted a couple days ago and does a fantastic job covering the whole situation, much better than I could ever do. So if you haven't yet checked it out, I'll leave his video both in the description of the video, and I'll probably pin a comment as well if I remember. But to keep it simple, there were three main ways where Honey was creating a problem for its users. So the first way in which it screwed people over is it screwed over anybody who was giving you an affiliate link to purchase a product. For example, a lot of YouTubers will leave links in the description to Amazon products that they might use, such as a microphone or a camera. And if you use that link and purchase an item off of that store, whichever store they're recommending, the YouTuber will get a little bit of a kickback through an affiliate program. Now the money that the creator would get from these affiliate links did vary, but what Honey would do is that would come in at the end of every purchase and steal these affiliate links. Now I could understand from some perspective how this would make sense. For example, if you go to checkout and Honey finds you a coupon code for 20% off, use the coupon code and then Honey switches your link with their own affiliate link so they get the kickback at the end. But what really made this bad is that a lot of times you would just press your little Honey extension right here to search for coupons, and even if it found no coupons, it would still replace the creator's affiliate link with their own Honey affiliate link instead. To me, that definitely comes off as scummy, but you guys tell me in the comments below what you think. The next way in which Honey scammed their users is by having agreements with certain stores. For example, Honey could hypothetically have an agreement with Amazon that allows them to not recommend anything over a 5% coupon code. A user might be able to find a 10% coupon code online, which they could use by themselves, but Honey would never recommend that coupon code, even if they already knew about it, because they already have an agreement with Amazon to limit the amount of coupons to 5% off the purchase price. Now, a lot of people find this misleading because Honey was advertising as the one-stop shop to find the best coupons possible and the best deals possible on your online purchases. But of course, they were not only recommending deals that were subpar, but they were also hiding other deals completely. And another way they were sneaking in their affiliate link in ways in which they weren't supposed to be able to was through their rewards program. Basically, anytime you wanted to collect your reward from a purchase, kind of like a cash back reward, they would add their affiliate link into there as well. Now, understandably, a lot of creators were very upset over this, especially those that were making a lot of their money off of affiliate links because the company that they were advertising was basically stealing back from them. Now, if we take a look right here, we can just look at their ratings from recently. Scam product removed from store, trash scammy website, freaking scammers, scam, Honey cookie stuffing, scam product. People are not happy with the product at all, and there's a lot of retaliation and backlash happening right now. Now, even if I keep scrolling, I think you guys can see it, the 1 stars are basically endless. A lot of these creators have a pretty far reach, and so their viewers are going to be pretty upset over the product and are going to be leaving their opinions on the review page of the Chrome extensions tab. Now, I'm sure I could probably scroll down for hours and keep finding more and more examples of these bad reviews, but basically you guys get the idea. This is going to start tanking their reviews, even if not too significantly. The hard part is that until this was uncovered, Honey already had a bunch of reviews, 174k ratings, and they're rating 4.7 out of 5 stars. So even if you left under the 10,000 reviews, it still wouldn't tank the ratings by too much. I think before this controversy, they were sitting at 4.8 stars, maybe 4.9, so it's helped out a little bit, but it's not that significant. I don't suggest any of you to waste your time doing this. The reason I am showing you this is to show you how many people are upset over this whole situation. Now, in terms of revenue, I'm sure Honey is a pretty small portion of PayPal's business. I think when they first purchased Honey, they were making about $200 million per year, and maybe assuming for some scaling up in size and all these kinds of scams that they're doing right now, they may be making close to $1 billion per year, but PayPal is a pretty large business, and I'm not sure how much this would impact the bottom line. My big concern here, and the reason that I am personally holding off on purchasing any more shares of PayPal, is because I think that there might be some class action lawsuits against the company, or maybe some government intervention. I would argue that even if this was legal, these are some pretty predatory practices, and I could see the government getting involved at some point. Now, personally, I'm going to continue holding on to my PayPal position. I'm not very concerned long term, but I think short term, if there is any sort of big headlines announcing any sort of lawsuits against PayPal for this whole controversy, there could be a pretty significant pullback in stock price as investors kind of pull out of the company. And so it might be an opportunity to buy in if you haven't had the chance to do so just yet. Now, if the company does experience a sizable pullback, I'll probably be adding more money into my PayPal position, but we'll have to wait and see. Now, just to further my reasoning for waiting on purchasing more shares of PayPal, if you look at PayPal news and you look down and scroll down, there's not really anything talking about Honey and its controversy related to that. However, if you look up Honey extension and go into the news tab on Google, you will find a bunch of stories talking about the same exact situation that I was just referencing today. This makes me think that a lot of investors might not know the direct correlation between Honey and PayPal, and they don't understand the risks associated with owning PayPal at the moment. Now, of course, this could just blow over and not be a big deal at all, which is why I'm going to continue holding my PayPal position for the time being, but there also might be a significant pullback in stock price, which is why I'm preparing to add more if that does happen. Comment down below if you guys think that these risks are overblown or if you think this is going to impact PayPal significantly. Also, I'd love to hear whether you own PayPal stock or if you're going to be waiting for another buying opportunity to enter a position in it. With that being said, let's move into stock intent and take a look at some of their financial metrics. If you guys are interested in giving stock intent a try for yourself, use my affiliate link, which I'll pin in the comments down below. It'll give you a 7-day free trial to the software. And right here, we can see that the revenue has been increasing pretty quickly over time. PayPal is a solid company. It's based on transactions. As transaction volume increases, PayPal, of course, is going to be making more money. Now, revenue increasing by itself does not matter that much. Revenue has to increase faster than inflation, but not only that, the company has to be increasing its free cash flow to be a very strong company. Now, the CAGR for the weighted average shares outstanding is -3%, which means they're buying a pretty significant portion of their stock back every single year. To me, this is a good sign. If they're buying stock at deflated levels, that means it's going to raise your ownership in the company and it's going to help improve the per share metrics of the company. If we take off net income per common stock, we can look at the free cash flow, and it has been increasing over time. There's a pretty substantial dip in 2023, but overall we can see it's been increasing pretty quickly regardless. Their gross margins at 40% and their net margins at 14%, but I'd love this to improve. If we look at Visa, they have a much larger net income margin. Now, pulling up Visa real quick, and yes, I do know that Visa and PayPal are not exactly comparable, but they do work in similar industries. We can see that Visa's net income margin is at 54.95%, which is a significant improvement to PayPal. Now, PayPal having a lower net income margin is not necessarily a bad thing long term. It does mean there is room to improve their net income margin. If they can do so, that'll definitely help out the company a ton. Taking a look at the chart, we can see how aggressive their stock buybacks have been. In 2019-2020, they weren't purchasing too many shares, which makes sense. The stock price was at basically all-time highs before the crash, but as the stock price started dipping down aggressively, they started purchasing shares very aggressively, which I'm very happy to see. In terms of valuation, we can see how high their valuation was in 2020 and 2021 before the crash, but since then, the valuation metrics have come down a pretty significant amount, so this might be a good opportunity to buy if you haven't opened up a position just yet. So we can jump into the valuation calculator, and I filled out my assumptions right here. We have our low, middle, and high, and you guys can fill them out however you want. That's going to affect, of course, the stock price calculation. But calculating this assumption right here, we can see the following. Based on my assumptions, we can see that my low price will be 126, my mid price will be 174, my high price will be 221, which gives us a pretty large margin of safety. Now, keep in mind, this is entirely dependent on my assumptions that I've made right here. So if any of these were to change, the stock price could vary pretty significantly. If I recalculate using more conservative assumptions, we can see how it affects the desired stock price. With the new assumptions, the low will be 107, mid will be 148, and high will be 190. So there could be a decent margin of safety here built in regardless. Now, this is still a tool I'm getting more familiar with. So if you guys have your own calculations that you've run for the stock price for PayPal, let me know down below. As always, that does bring us to the end of today's video. I really hope you guys enjoyed taking a look at PayPal stock and hearing me talk about why I'm not purchasing any more shares at current prices. If you did make it this far into the video, leave a comment letting me know whether or not you hold PayPal stock and if you're planning on buying more at current prices or holding off for the time being. Also, if you haven't yet checked out my last video where I talk about 10 deep value stocks for 2025 according to Barron's, check out this video right here. And if you want to check out this video where I talk about my dividends for Realty Income and Agri Realty Corporation and how they've increased from the beginning of 2024 all the way up until now, check out this video right here. Remember, the best time to invest was 10 years ago. The second best time is today. I want to thank every single one of you guys for watching. I hope you have a great new year, and I will see you in the next one.